The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And we've got another day out here where we've got a little bit of action. And it's not amounting to all that much, but if you are a bear, it's a little respite from the normal jam it up. Of course, every time we get above 2108, the volume disappears. The highs cannot be held, but at the same time, every time someone tries to sell it, there's somebody out here buying it. So I guess we have a south of the border standoff, I guess as it would be called. And as we start the day, 1.83 billion shares on the New York Consolidated Tape. So volume about where it was yesterday when they were pushing it up. Now they're pushing it down, about the same thing. Just not a lot of impotence out here. There is more stuff going on. And the grease is not the word today. It's another word, and it begins with R. I talked about it about 7-10 days ago. And we'll bring that up again today. But it looks more and more like a likely outcome unless they pretty much, I guess, put on a clown suit and molest the numbers ad nauseum. It looks to me like there's no way around getting 2 quarters of declining, as they say, declining growth. I would say shrinking economy is a better word. They always say declining growth. Well, does that mean that the growth is not as much as it was, or that actually the economy is shrinking? And they chose some very clever words. It's kind of a politician word, isn't it? Weasel words of declining growth. No, there's no growth. It's just declining. It's kind of like when they tell everybody they cut the budget, and what they did was they only went up 2.8% instead of 3.3%. It's not that they went up 2.8% and someone was arguing they should go up 3.3. They cut the budget. Oh, those guys, they should be hung. All they want to do is take the poor and eat their entrails and steal their babies. There's a lot of weaseling going on out there, and weasel words will be around forever. But I do digress out here.
That it's all just a little bit of history repeating.
On this day in 1946, the stock market is still euphoric over peace, finally. The Dow Jones Industrial Average hits its immediate post-war high of 212.50, a level it will not surpass again until April 12, 1950, nearly 4 years after chronic doldrums. And there was a lot of reasons for that. Bad policy, probably all the way since 1932. And when we wonder why the economy hasn't pretty much come back the way that it has before, it's because we tried what we tried before when it didn't work. And other than the growth we had in making machines and devices that killed others, there wasn't a lot of growth in the 1940s. And it took really a change of a political view into the 50s to get things turned around. And, of course, what was it, 1952 that Mr. Ike came to power? In the meantime, we were starting to get hints that the economy should be going after trying pretty much the wrong thing for darn near 18 years. And maybe things will be like that here. Hopefully they're not that long. Maybe it changes a little quicker. We decide to figure out what has worked in the past and try that again. Of course, that would be too easy, and that's what they'd be expecting us to do. Of course, as I said, the R word out here, not the L word, not the C word, the R word, and that is the U.S. economy shrank at 0.7% annual rate in the first 3 months of the year, depressed by severe winter and widening trade deficits. And I've been saying it for about 2 weeks that the only thing that really makes a lot of sense out here for what is happening in this market right now, when you give the commodities a little bit out here, they say that demand is shrinking. And when you look at the way that markets are moving, they tend to really, you can see the bubble that the Fed has caused by this, nowhere bigger than in San Francisco, where people continue to make ludicrous offers on on startups that have never made a dime. But when money is free, and I guess you can always go bankrupt, there doesn't seem to be a lot of risk aversion that we have now. In fact, I was going through some stuff where we had this morning where I was going through all these startups, and they were talking out there at some conference about how many offers they had and for how much, and what their companies are valued at, although they haven't even brought in a dime, much less made a dime. They haven't brought in a dime yet, and they're 8, 10, 16, $20 billion valuations. Give it to somebody, I kind of want a test pilot getting in the plane and making sure it works before I fork over, I don't know, $5-8 million for my new Hawker Siddeley. Don't want to just say, yeah, we put it together. We think it's going to fly, but you know what? There's your new private jet. Maybe it works, maybe it doesn't. But we're still going to charge you $8 million for it. Just awful, awful tough. If you got that kind of money, boy, it would be very hard for me to turn loose. That I would much rather have something that had a business model that I understood and that had slowly started to grow, instead of a business model where basically you're at the roulette table betting on black or red. And of course, Wesley Snipes would tell us to bet on black, but I digress. The C word is cancer. Somebody in the den didn't know that? Okay. Yeah, the C word, cancer. No one ever says that out loud. I guess well, I won't even get into that. Anyway, I don't know what else to say about that other than all the numbers. The dollar moving out here today, not really giving clear indications, off 12 cents, but 96.85. I'm pretty much of the camp that as soon as the Greeks default and the pretend and extend policy of the EU is no longer possible, that we'll see the dollar index go through 100. Polls continue to show that the UK wants to secede from the EU, and it's hard for me to see that, you've got maybe a year and a half before that election. It's hard for me to see that they change that much. They'll try to scare everybody, but I don't think that that's going to go too far. I think that they pretty much know that while, they depend on the rest of Europe, they're nowhere as close to being as weak and worthless as the French and a lot of others out there that basically figure 30 hours is all they can work a week. And they don't want to work hard to just give their money to those who will not work. And that is the problem with socialism. At some point, you run out of other people's money, and you're the one paying it. And you think maybe, hey, I'm paying this now. Maybe that's not the idea that I particularly wanted to have out here. But I do digress.
And now, deep insights and random thoughts.
Anyway, just one thought out here, and it has nothing to do with trading or anything else. So you can take a 1-minute hiatus, maybe 2 minutes, while I discuss this. And I'm thinking I've got another script for Seinfeld out here. And I don't know what to do about it. You can email me at path@tfnn.com. You can call me at 877-927-6648, or you can post a message in the den. And my plight today is I went to the bank, got some cash, and I got money, and there was something wrong with it. And I wanted to know whether I should just hand it to somebody else, knowing that there's something wrong with it, or if I, what else I could do with it. It's not that it's illegal money or counterfeit money. It's smelly money. It smells like my grandpa. It smells like my grandpa probably several years after he passed away, kind of bad smell. Now, I guess it's money, so it still spins. But, if it was like $100, I'd just say, well, there's no way I could bypass it. But it's 2 stinky $1 bills, and they smell horrible. Now, I'm wondering if I give them to somebody else. Maybe if I give them to a store, they'll just go to the bank or something. But I started smelling this horrible smell last night. And I had to look all over. I thought something had died. Maybe somebody had thrown some shrimp in the room or something and let them just roast. Well, I guess it wouldn't have roasted. It's Pleasant 74 in the bedroom. But I thought maybe someone roasted out here. Anyway, now I don't know what to do with it. And I don't have a George Costanza to tell me what to do with the stinky money. But it's $2 and it smells. I guess I could just throw the dollars away and write it off. But I'm cheap. So what else can I say? I guess I could take it to the bank and then it would smell in the bank somewhere in a vault. But what is the chance I get this to other people and they wake up in the middle of the night wondering what's stinky? Anyway. Yes, they want me to go fully electric so it won't stink anymore. Well, anyway, that is just one of my random thoughts today.
That was Deep Insights and Random Thoughts.
Other things going on out here. Altair is back up 4% today. The discussions between it and Intel are ongoing for a buyout of about $15 billion. And I had a bunch of people email me over the last couple of days. I said I would discuss it today. When we come back, a lot of people don't understand what programmable chips are and why Intel would want to buy Altera. I don't know if it's worth the $15 billion. But when we come back, we'll talk about that. We've got Sam from Philly who's calling in. He wants to talk about J&J, so we'll talk about that. So we got lots of things to go on, and I will soldier on with my stinky dollars. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Most of the comments from the email are all about putting it in the washer, but somehow I have a feeling that Secret Service would see through such a sham as me saying, I accidentally left it in my pants and it just happened to be washed. They're all knowing and all seeing. In the meantime, we're going to Sam in Philly, J&J.
Hey,
how you doing, Sam?
Good. How are you?
Great. It's I tell you what, I thought it was going to be miserably hot all summer, and boy, has it been nice down here this week. So I'm happy.
Yeah.
I thought I was living on the surface of the sun for a while, but now it's gone back to being nice.
Right.
Very happy.
I'd like your opinion about Johnson & Johnson. Is it time to buy?
Johnson & Johnson basically was in an asymmetrical triangle. That is that it had basically kind of a lower highs, higher low kind of thing. It broke out of it to the upside. It's gone back into the trading range. Here is what I think is happening with J&J, and it is a lot of these other stocks. So much of their money depends on stuff that they sell to hospitals. And with the government ACA thing up in front of the Supreme Court, you have the problem of a possible headline risk coming in one way or the other. If you don't have a strong indication of which way that court case is going, I would not be in healthcare stocks. I would wait until it happened after. I have no idea which way they're going to rule, but my guess is that even if this isn't affected directly, because it will be in a basket of stocks that you'll see some big movements. And if I don't have an abiding belief of what direction a stock's going, I can't buy it. But that's it. It's in this headline risk, and the headline is going to be from the Supreme Court. And if all the stocks go up, this is going up. And if they all go down because of them tossing it all out, it goes down.
But as far as the chart itself, is it like flagging? It's like want to form like a baseline?
No. No, this stock is doing absolutely nothing other than a false breakout. This thing needed 12 million shares just to tie the previous high, or 11 million if you were thinking about it. It went above it on 10 million. It closed back below it. That's a sell signal. It's come back here and gone flat line sideways. It's doing absolutely nothing. Sometimes there is just no play to be had, kind of like when someone puts you're playing tic-tac-toe, and the first thing they do is go right to the center square. There's no other outcome other than a draw, right? And that's at least the chart pattern here. I see that there is no upside, that there is no downside that I see. But the only thing I could see is if you knew a fundamental reason, i.e., you knew the outcome of a court case, that really would have me in any of these stocks. I don't want to be somewhere where it's all or nothing. The one thing that you may do you play options?
Yeah.
The one thing that you could do is, and that may pay off, is if you wanted to sell some kind of spread out here, or sell a spread, and just assume that as this court case comes up, that you're probably going to see the premiums start to expand on this. They probably have got to be pretty flat. But if this thing goes out a couple more days, I'm not exactly sure when the announcement is, but I think it's in the next 2 weeks. You could see a real expansion in both the premiums for the puts and the calls. And that may be the only thing that I think that would work, and sell them right into the announcement. So you don't have to take the problem on either side. And that would probably be it.
Perfect.
So, but, I mean, seeing, we're at a fairly low rate for the VIX, which probably makes almost sense that you could sell these, or you could buy some kind of spread and see the premiums go up. But that would be it. In fact, actually, maybe other stocks in this healthcare sector that have more volatility going into that announcement that would be more directly affected may even be better plays. But that would be my only other thought.
Perfect. Thank you.
You bet. As always, what else do we have going on out here? Did I get to all my news? I was starting into it, I guess. We talked about Altera. I was going to get into that. We're out of time in the segment, too. Question about what's going to happen with the economic statistics. I have an idea, and we'll talk about that throughout the show. And, of course, I see Tom O'Brien in the den already, getting ready for his 3 o'clock hour. I should be over there in the 4 o'clock hour. We got a lot of stuff for a short week. A lot of stuff happening in technology because, of course, the Google I/O conference, Apple iPhones bursting into flames. A lot of stuff going on this week. So we'll look forward to that. And we'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we're back, got a little bit of things going on out here in the market, seeing a little bit of weakness. Certainly seems over the last few weeks that 2108 level seems to be some kind of trigger for somebody in the S&P, and that has been where they've started to buy or defend the S&P at about 2108. And it's not like they care if it goes any higher. They just don't want it going any lower, and they're in there buying at 2108. I don't know if it's the Fed. I don't know if it's Goldman Sachs. I don't know if it's a great cabal of aliens from another planet, but it certainly looks like 2108 has been where these people have decided to plant their flag. If there's a huge amount of volume or selling pressure, they'll stand back, and they go right back to buying until it gets to 2108, and then they kind of sit back on the sidelines. But that's pretty much been where it's at. We're off 12 points on the S&P cash, 2 billion shares. So again, it's going to be kind of a light day unless something drastically changes into the weekend. Fund buying starts, of course, really kind of started yesterday. Not a lot of people wanting to get in front of this, and they ran the market up over the last couple of days, I suspect, for fund buying. In fact, we've got this. We've got a bug in the Goldman Sachs trading floor, and I heard this today.
Well, let's put some lipstick on this pig.
That's right. They basically are ready to doll up that pig, put a little blue ribbon on it, make it look like it won a prize. And that's kind of where we've been at. But it hadn't been going up any higher. There isn't any real demand every time we get up to those highs. Just kind of rolls back on over by like Mr. Stinky Pig. This pig that smells like my cash. Anyway, just looking at this, we'll see whether it closes back under that 2108. My thought is that we've got basically a day or two for fun money to come in. And I suspect that by 2 o'clock on Tuesday, all that fun money will be in and over. I've seen lots of examples of ridiculous upgrades that have nothing to them. Many of them have folded in one day or less, which is a good indication that they tried to run the shorts, and either the shorts were holding fast and or there weren't any to get. And that continues to make me think this is an incredibly frothy market with limited upside. And maybe that there's 80% chance that we see 10 or 15 points higher in the S&P cash. And there's 20% or 10% or 15% chance that we see 100 points down in the next week. And to me, that is an asymmetrical trade that at least to the upside is probably not worth it. To the downside, Monday and Tuesday, I will be looking at buying options in the daily newsletter. And I think probably a pretty good deal out there. Tom O'Brien's nice enough to tell me we have Russell 2000 rebalancing coming into the close today, and the volume will pick up. And normally that volume really doesn't happen too much. Many years ago, they decided to figure out a way that they wouldn't get a lot of these retail outlets like the big street banks wouldn't be screwed over. And they basically have a deal for the funds inside their own headquarters. And any of the rebalancing they need to do normally is done in-house. They just report the numbers in the last few minutes of the day, which is one of the reasons why you see so much volume at the end of the day. But normally they won't let these things get marked up on them. They like to mark up. They don't like to buy marked up. And so a lot of that stuff is inside, and you'll see a lot of movements. But those deals are not on both sides of the aisle for the most part. There will be some retail trades and some hedge funds that are not in on the deal and probably being screwed over by the banks, Wall Street banks, as we speak. But that'll be interesting to see in the Russell 2000 out here. Other things of interest out here, wanted to start looking at some of these other stocks that were moving before the end of the day. Avago, of course, already decided that it was going to buy out Broadcom. Pretty interesting. We talked about Altera, and I'll try to get into that before the end of this segment. Lilly is up, announced a clinical trial collaboration with AstraZeneca. So it was up 2% out here, not a huge amount. LLY, let's take a quick look at that. Again, so many of these stocks breaking above previous highs and coming right back into the trading range. Certainly LLY is doing that today. You really needed about 10 million shares from the December 11th high at $75.10 to really break above this. And like a lot of these things, they are going higher, but bouncing within a day or two right back into the trading range. I don't see anything else out here. We talked about the fraud that is the Chinese stock markets, and how basically they have two sets of books, one for China, one for the U.S. SEC, and Bishop Holdings is probably one of the poster childs for that. They've already been caught with their fingers in the cookie jar, telling a stretcher, as Mark Twain would say, about how many stores that they actually owned, and didn't even get their hands slapped or anything. So imagine other companies are doing the exact same thing. This has a big gap back out here. We've had some huge volume down. This thing penetrated once again today. And, we started hearing warnings about things like Enron from Chanos, 6 months, a year before they all blew up. a lot of these stocks, Wall Street's pretty good about circling the wagons, making sure that the pilgrims don't get the arrows out here until they talk it up, phony upgrades. It's all a bunch of hooey, and one day the bottom drops out. And I suspect that this, like a lot of other of these stocks that are the living dead stocks, stocks like BlackBerry, that they continue trying to hold up at this $10 level so that they can get some stupid fund to buy it and take it off their hands. That is kind of what you're looking at. And a lot of these stocks are in heavy distribution. My guess is that, you know, if you are in for a penny, you're in for a pound on this. And a lot of people were piling into this. They will continue trying to push this stock up, run shorts, and eventually it's kind of like this tree I had out in the back, and that was ants that started eating in to the base of it, but you really couldn't tell. One day the storm came along and the thing just snapped and fell over, nearly missing a car. But you couldn't tell from the outside how brittle it was, but it was pretty much eaten away from the inside by the ants. And I suspect that we're going to see a lot of these stocks, especially this one's probably going to be the poster child since it's been so well documented about what's going on with it and the lack of transparency as to what actually happens to a online company in China. But I do digress. Wanted to get back to anything else out here that really mattered. Is there anything else out here? Alchemies was up. Another thing, but I don't know if there's anything worth out here. To me, the most important thing is URI. Well, the reason why is that we continue to see this thing head back down lower. This is telling you exactly what numbers are going to look like next week when we get into commercial real estate. These people basically rent all the stuff that goes to those people, building bridges and generators and cherry pickers and all the other stuff that goes into that industrial equipment that they rent, including bulldozers and trucks and that kind of stuff. Down for the second day on monstrous volume. I continue to think that there isn't a whole lot out here that you want to get. Now, in the last, I think it's going to take me about 6 minutes. A lot of people ask me why Altera would want to why Intel would want to buy it. And basically, Altera makes a thing called programmable logic circuits, or PLCs. And just to give you an idea, there is basic logic, and it's not very tough to understand. But I will pretty much go through it, and you'll, I think, hopefully understand this in the next 6 minutes on Altera and understand the ramifications of Intel buying them. Programmable logic is this, and if you have lights in your house, one that has multiple switches, I think you will get the idea. There are basically 4 or 5 conditions that you can have. Most of the time, if you have a light that comes on or off, you may have a switch that if you turn it up and it's off, it'll go on. If it's on and you flip the switch down, it'll go off. And that may, basically might have 2 rooms hooked up. Sometimes there's even 3 switches hooked up like that. And that is the basic logic. Now, programmable logic switches have a little bit more to them. If both switches are up, maybe it goes on. If both switches are down, maybe it goes on. If one's up and one's down, maybe it goes on. But literally everything in the processor you have that you're listening to this program on right now works with that basic amount of logic. And they're just put together with other logic in transistors that does exactly that. Now, what you can do with a programmable logic chip is literally there are all these kind of switches, and you can tell them whether you want them to both be on to send a signal out, a voltage out of the other side of that switch. If you want them both to be down to send one out. If one can be up and one can be down and it sends out voltage, or no voltage. And basically all the permutations of just on or off for 2 switches is how everything in the world is built. So on, off, and sometimes multiple on-offs, as many as 8 or 10 or 16 can be that. Now, what Altera does is surround this core logic with the ability to plug into other things. Let's say like a USB connection and or the ability to take audio in. So maybe, or send audio out. That's called an interface, and you can have both inputs and outputs. If you have a computer, you've plugged in your speakers, you've plugged in your microphone. That's basically it. The difference is that you can make any of those ports either ins or outs. And if you've bought a computer lately, in the last year or two, you'll notice that no matter what you plug in, the computer now asks you, is this a microphone? Is this line level? Is this a speaker? And even if you plug it in the wrong hole, it will be able to reconfigure itself and send it out. Where these programmable logic chips are used highly is where things are not set in stone. Normally, if you buy a router, computer router, and you turn the thing on, what you will find out is it seems like forever for the thing to boot up. Well, if it had a fixed processor and memory, it would probably boot up in about 5 seconds. But you need to be able to change the logic in these programmable logic chips if it's a computer router. Whether it's a Cisco router or whether it's your home router, they basically work the same. And that is that there is a program, it's kept in memory, and when you turn the thing on, that program goes into that chip and reconfigures all those switches, either up, down, left, right, and there may be hundreds of thousands of them. And actually, it's kind of like these chips may have even the equivalent of 10 of those kind of chips in each one. So you can actually hook one into the other, into the other, into the other. And they're basically infinitely configurable. There are some companies that actually use these as the processor in their devices, especially if they don't need to be extremely fast. If you have a dedicated processor, generally better. But a lot of times, especially in routers, things that have to be configured for real-time logic, like the internet, anything that has to happen right now, things like compressing video, other things like that, need to be able to be reconfigured sometimes, are in it. Now, Intel has basically spent all their time and effort in building chips that are not configurable. They are basically as they made them, and they will be thrown away one day as they were made. Intel is the #1 maker of memory. They make more memory than anybody else, Micron, all the others combined, Samsung. It just happens that most of these things come with their processors. Whatever core memory is in there makes them bigger than everybody else. There is a lot of synergies with them being able to get into a business of configurable logic, especially with their manufacturing techniques. So I think that there's probably a lot of synergy between the two companies. I don't know if $16 billion is too much, too little. It's hard for me to understand what's going on between those two. But certainly, if you're doing one, it probably makes sense to do the other. Altera signed a deal last year with Intel to have it actually manufacture its chips. I suspect Intel figured out what was going on in there and said, hey, I can see what you're doing. I'm building your chips now. Why don't I just buy you? I can see how much business you're doing, and it makes sense for me to own you. So I would suspect that if anybody has a good idea what Altera is worth, it is Intel. I'm not saying they should buy them, but I don't think they're going to make a stupid decision.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Looks like the market's a little bit scared to go in to this market long. Not real scared, a little scared. 2107 on the S&P cash, 2.15 billion shares. So we are behind yesterday, and we'll look for all that volume coming in at the end of the day with rebalancing. But like I said, most of that volume anymore is in-house between all the funds that someone already owns. They just make an agreement, and they'll say, okay, we'll buy more funds back later when the dust settles. I've seen some fairly good academic research on this fund rebalancing, and you can have a lot of volume, but generally most of these things are traded in-house. That's it. Okay, what else do we have going on here? Somebody said XPO Logistics is a company run by a former URI guy, And this is kind of very interesting, too, in that there hasn't been, you basically had what should have been a sign of strength when this thing gapped up on the 29th of April. And not a lot, anything since then. This thing kind of pulled back. Volume did not increase today, but to me, this thing looks like you'd want to see this thing at least come back to about 45. And hopefully the volume all drops out there. But this could be one more of a ton of IPOs that I've seen, or not IPOs, of breakouts, false breakouts that I've seen. Other stocks out here that continue to be under pressure. This is a company I love just because of the gentlemen that run it. I love the sector it's in. I don't love the price of it. I think it's coming back down like a lot of these IPOs over the last year. And, you know, Apple got back down to $6.45 post-split. What is that today? $1 now? Something like that. You know, you want to buy these things when they come back, not when they're running up. And Workday is still one of the best companies. It's kind of like Paychex, but all online for business owners. I still love the stock. I mean, the company. Don't love the stock yet. Volume has been pretty brisk, even today, back into this low of $76.36. I would imagine any kind of market pullback is going to continue to break through previous lows in a lot of these stocks. You know, there's just not much more. It's got high volume low at $64.21, and I suspect that on a market pullback, that's where we would be heading. Watching the volume here in the last few minutes of the show, 2107 on the S&P Cash, 2.2 billion shares. So volume slightly picking up, but not much happening out here today. Yeah, PNW, it's high out there. In the meantime, we're getting ready for the Tom O'Brien show. I'll be over there in the 4 o'clock hour. We'll be talking technology. And I don't know what else there's other to say out here. Get a lot of sleep this weekend. I suspect Monday, Tuesday, Wednesday, we're going to have some action in this market. I don't think it's going to be quiet. I think we're probably going to see a little push on Monday and Tuesday for fun buying. And the question is, if we don't see a lot of cash coming in this thing, it doesn't break out, my guess is we're going to get some longs out here thinking that maybe it's time to start taking a little cash, wetting their beak, putting a little away for a rainy day and coming back another time. But we'll talk more. I wonder what Tom has to say about the R word. I don't know, but we'll see. Anyway, we'll be talking about that. We've got lots of technology to be talking about, a nice special on Monday night that you probably should watch, and a lot of other stuff like that. In the meantime, as always, sell when you can, not when you have to. And we'll see you in the 4 o'clock hour. If not then Monday, same bat channel, same bat chime, channel 14 on Tiger TV. See you.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.